FHA, VA, down payment assistance, grant programs, conventional. How do you know which loan product is best for you? Hi, my name is David Thompson with Dream Builder Realty Group. Let's chat about all these loan products to hopefully find the best product for you. I do stress the fact you should get a great loan officer to chat with to go over all these products. So we're going to go over all the basic types of loans, but understand there's a lot of additional loans that are out there. The first one we're going to talk about is FHA. FHA is offered by the Department of Housing and Urban Development. And an FHA loan allows you to purchase a house if you've had some questionable credit, lower credit score. It also allows you to purchase a house if you have some additional debts. We call this debt ratio. The amount of debt you have compared to your income, the government will allow a higher debt level and still purchase a loan with the FHA. So FHA is flexible. Now, FHA has a maximum loan amount that it goes up to, but it's a pretty good loan amount. And with an FHA, there's what is called mortgage insurance premium. It's part of your payment, and a little bit is financed up front. Some people get that confused with housing insurance, but it's not housing insurance, it's called mortgage insurance premium. That funds it for the United States government, and you only need to put down 3.5% to do an FHA. The seller can actually pay most, if not all, of your closing costs. So in summary, FHA is very flexible for credit, debt, and allows you to get in with only 3.5%. So let's talk about VA. I was a veteran and my family is pretty much veterans as well. So VA loan is for veterans. Now a VA loan will allow you to get into a house with basically zero down. And you can even have the seller pay all your closing costs. So it's a fantastic loan. Where FHA has that mortgage insurance premium, the part of that payment, VA does not. So typically a housing payment is cheaper on a VA than it is on an FHA, and both are flexible on credit and income both. VA does not have a maximum loan amount. So as long as your income can qualify, you can buy a very expensive house. So a VA, seller can pay your closing costs, no money down, no maximum loan limit. Flexible on credit and flexible on income. So let's talk about conventional. We've covered FHA, VA. Now we're going to move on to conventional loans. Conventional loans are a lot tighter when it comes to credit and also to those debts, debt to income. But typically your interest rate might be a little bit lower on a conventional loan. Now, a conventional loan, there's products that you can only need to put down 3% on a conventional loan. And you do have what is called PMI, which is private mortgage insurance, versus with the FHA, which is called mortgage insurance premium. It's the same thing. It funds the program if you would. However, if you put 20% down, that disappears. So on a conventional loan, you also have the maximum loan limit. But the way you look at it is this: if I have really good credit and I have very little debt, I'm probably going to go conventional. If I have questionable credit or some blemishes on my credit, or I have higher debt, I'm probably going to go FHA. If I have 20% to put down, I'm definitely going to go conventional because it ends up being the cheapest with no PMI or MIP. But if I'm a veteran, I'm going to use the VA loan. And let's talk about USDA. Yes, it's the same people that stamp our meat. So it's called a rural development, and it's offered by the USDA. It's for houses that are outside the city, out in the country, rural properties. And there's a map that you can find out where the properties qualify for. Now, to get this loan, you have to make enough to qualify for the mortgage, but you can't make too much that you don't qualify for the program. So there's a little bit of an income window there, if you would. But it's another 100% financing where the seller can pay your closing costs. And that is called the USDA Rural Development Loan. Now, many states have what they call down payment assistance programs. And these are not loans in itself. These are programs that, if you would, that piggyback upon these other programs and allow you to get in properties with a lot less down payment on it. So it's called down payment assistance program. So if we're talking about grant programs, MISHDAs, and different types of programs like that, they're a piggyback that go on top of the other one. So you have to qualify for this loan first, then you add that program onto the top. And those loans we just covered are the basic type of loans. You got FHA, VA, conventional, that covers the majority amount of people purchasing homes. However, there's a list of at least 50 other products, and I call these if it makes sense. So there's all sorts of programs that are designed for somebody that might not have a citizenship, somebody that runs a business but writes off all their money and they don't show a profit on their tax returns. However, their bank account has lots of income that comes in it. Or if somebody wants to buy an income property and we want to ignore their income, we're just looking, does that income property make enough money to pay the payment? So if it makes sense, we have other loan products. So that's the scenario of all the different loan products that are out there. And if you want more information, you're welcome to give me a call. I can go over the basics with you, and I can recommend a great loan officer to go over everything in detail and find out which product is best for you.